Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 6th of June here in 2023. Few things to go over in tonight's video. Let's start with the obvious. Number one, the S&P was, as Don says, massively unchanged. But actually, what was massively unchanged? Nasdaq and the Dow. Not any different than it was on Monday, despite a sideways trading session. But there is something a little bit off. Do not adjust your monitor, do not adjust your screen, do not adjust your video. Yes, the Russell was up 3% today. 3% in a day where not much else happened. And we can take a look at this in a little more depth. Let's start with that S&P. It was a split market as in all these right here with a red. That included some of the big monsters of tech. That was Microsoft, Nvidia, Apple. But some of the other monsters, Google, Amazon, and a little bit here in Tesla, were bullish. And the thing to watch in today's session, if you are bearish, was those. But it was the healthcare. XLV was down almost 1% in today's session. So the weakness came from the healthcare and from the technology sector. And a little bit over here in consumer staples, which is P, right there. And if you look at the Nasdaq, that's your tech-centric market index, and it had a split. Here are three monsters of tech that were negative. That's Nvidia, Microsoft, Apple, and we'll talk about Apple in a minute. But the others were bullish. Look at Tesla, look at Amazon, look at Google. That counts as one. And Meta, which is Facebook, which also has the goggles. So we'll talk about that. That's kind of the big news in an otherwise flat trading session. But we call these here in TheoTrade monsters of tech. And they can lead the market. They have the big market cap movement they're able to influence the Nasdaq. But when they're split, think of it like a fight. If you're pulling this way and they're pulling that way, you get the massively unchanged outcome right there in the Nasdaq. But it wasn't all bearish. Again, we saw this. Hard to believe, but there is the gain. And we had the gain mainly taking place in the financial sector. And these are a lot of small cap companies right there. The XLF was your big market leader, was up over 1%, but green was across the entire landscape. In industrials, I right there. Consumer discretionary, we'll find it, which is right here. That's XLY. Again, these are small cap names, but across the board, real estate, materials, and on and on and on. That's why the Russell was up as high as it was. And let's start there. Because, just to be a little clear, the Russell is also in a trading range. So the bulk of 2023 and the latter part of 2022 saw the Russell up, down, up, down, up, down, and right now, back up. So it's just a volatility box. Don would use the term volatility box. I use the term rectangle. It's the same concept. It's a sideways move. There is no movement in the Russell. And if you're trading the IWM, that is your tradable ETF. And all it did was come up from its oversold or support level at 170 per share. It's gone through the middle, 180 per share, and maybe that heads to 190. But that's a little odd given where the SPY is. The SPY is your spider. It's your S&P 500. So it is at the top of its trading range, and that's what we call, or I call, relative strength. Relative strength means given the Russell simply came up from its low to the midpoint, and the S&P, even though it's going up, it's actually at the top. Now what has, if I can use the word, stronger relative strength, more relative strength, greater relative strength, is the Nasdaq. And again, the Nasdaq is your technology-centric names, and those would include, promise you, we talk about it, Apple, which had its, I want to say Google Glass, but it's not Google Glass, it's Apple headset. Not quite sure, but that is your $3,500 virtual reality headset or glasses that you'll be using in a virtual space. So not going to talk about that in the video, too short of a time to discuss that, but of course, other instructors, Don, and other videos can talk about the impact of Apple and their most recent technology flub. We'll see. But nevertheless, Apple is in the uptrend going up right there with NVIDIA, which itself is on that 400 per share level. And these, just to name a few of them, are some of the largest. We'll take a look at our market watch. We'll go over here to quotes. And what are we looking at? We're looking at performance from the beginning of 2023. So this number here, rate of change, don't worry too much. All it shows is the percent change in the year. NVIDIA is up, how we'll translate that, 152%. Behind it is Meta, which had its little virtual reality, the metaverse flop. But that was 2022. Their stock is rebounding when they ditched the metaverse, or at least focused their attention elsewhere. Their stock, believe it or not, is up 132%. Behind that is one of the biggest gainers, actually the biggest gainer in today's session, AMD Advanced Micro, up 5% in today's session, and in 2023 so far, up 95%. Tesla had a rough 2022. Many tech stocks did. So these percent gains, they are large and they are real, but they're a little bit of a throwback, if you will, to how beat up these names were, Tesla included, in the last year. So a little bit of a mean reversion, if you will, or a bounce back, given how weak these stocks performed last year. So a little bit of a bounce back. It might not look like as much on the chart, but Tesla shares were down 75% in 2022. And from the bottom, just at the beginning of the year, Tesla shares, again, not looking like a lot of price bar activity. Per percentage-wise, it is up about 90%. And when you go from 400 per share down to 100, that cuts your value by 75%. But you go from 100 to above 200, roughly speaking, that is going to double your stock price. So a lot of technology companies, NVIDIA falls in that category as well to an extent. So its share price go down by about 65 or so percent. But in this year has seen a rebound. And that's not cherry picking the data. A lot of times when we're looking at relative strength, we'll pick a certain point in time, and that time is often year-to-date performance. And that comes to where the stock was trading in January at the beginning of the year and where it trades currently. And that is up 160%. Which brings us back over to some of the other stocks that are up there. Most of them are technology names, but you'll see some of them are not. General Electric, we can consider that potentially a technology name, but not really. Salesforce.com. And the others go down the list. The first financial stock is Booking, BKNG. But there's Microsoft, there's Apple, Netflix, Oracle, Adobe, and there's some other financials, Capital One. And you see some of the other list of stocks that are outperforming. And in fact, the S&P is up around 10%. So anything above this number would be considered to be outperforming the S&P 500. On the downside, stocks that are worse or weaker are Pfizer, MetLife, CVS, US Bancorp, Triple M, Walgreens Boots, and some of the others. They're down a greater percent in terms of where the market is. Again, 10% for the S&P. These stocks are weakest. Most stocks are somewhere between. That's relative strength. We want to try to go long with the stocks that are strong, short with the stocks that are weak in a general, broad-based sense. Another way to look at relative strength outside of percent change from the opening of the year is stocks making new 52-week highs. Now, on a scan, this is simply the scan list. We'll go to, mine is default, but it'll be here, load scan query. It'll be public, and from public, go to new yearly highs. Which stocks make the cut? Which stocks made the highs in today's session? Google, Meta, Berkshire, and a few others that may not be on your trading list because they don't have that large, I say large, but they don't have that large of market cap and maybe not good liquidity. But nonetheless, these are stocks out there making highs, and things that do puzzle me as a trader and thinking about the big picture is or are home builders. So Lennar, Pulte Homes, and some of the other ones are in that list. So PHM and LEN would be names that you might not think about, but they are Strong getting stronger, making new highs. That is Pulte and that is Lennar. Again, strong gets stronger, and they show relative strength. That's going to translate right there into the XHB, the home builders, which, given where we are at interest rates, this is something puzzling. We can understand technology, we understand artificial intelligence and where the numbers, or at least where the expectations are, but this might not be as high as it should be, but unless it is. And that's one puzzling thing to watch about the market. Outside of that, the bond market is coming back to lows and again trading up. That's TLT. And we're looking for the Fed in this upcoming meeting just in a few weeks, if they're going to raise their benchmark rate from 5% up to 5.25, or, as the odds have quickly shifted now, keep the Fed funds rate the same, lock it at about 5%, and maybe that's the peak. That's the discussion going forward. One final point in tonight's video. Today's session was a low volatility event. Neither the upper or the lower expected move on the intraday basis was hit. Tomorrow's session, we're going to have a similar expected move, 21 points or handles in the S&P, and for the Nasdaq, 102. Just keep a look at these. Even if you're not an intraday trader, it does set the stage for what the market is pricing in about the next days of volatility. Not much news, not much earnings, so anything that happens would be a surprise. That's a news event or something out of the ordinary. We'll see in these next few days. As always, take care and be safe. This is Corey Rosenblum with tonight's Theo video update for June 6th, 2023.